The topic for my team is oil prices impact SolarCity. First, I would like to introduce SolarCity. SolarCity is an American provider of energy services headquartered in San Mateo, United States. SolarCity has grown rapidly in the recent years. The overall US market has grown from 440 megawatts of solar panels installed in 2009 to 3,300 megawatts in 2012 and then 4,300 megawatts in 2013. Leasing solar panels to households and selling complete solar energy systems form the revenue stream for SolarCity. According to the 2013 annual report, 50% of the revenue comes from leasing solar panels and 50% of the revenue comes from selling complete solar energy systems. In addition to that, one of the most important operations of SolarCity is to produce charging stations for electric vehicles such as Tesla. The Brent crude oil price fell by more than 40% since July 2014 and closed at $57 on the 12th of February. The reasons for this drop include the refusal by OPEC to restrict output of the cartel's output of over 33 million barrels per day. Secondly, non-OPEC supply growth from US shale US fracking, for example, also affected it. Moreover, decreased consumption due to economic downturns in Europe and Asia contributed to the downfall.
Crude oil prices are not directly correlated to solar energy. Oil counts for only around 1% of the total electricity production in the US market, and the percentage is decreasing. The biggest competitor for solar electricity production is natural gas, which is the second largest method of production, counting for around 27% of the total electricity production. Natural gas prices are highly correlated to crude oil prices. This has the potential to impact SolarCity's revenue generated from leasing solar energy. Another interesting variable to look at is the demand for electricity superchargers manufactured for Tesla motor electric vehicles. In order to assess the impact of future oil prices on SolarCity, we had to build a forecast model. It is based on 2 years of historical data of the Brent crude oil spot prices. With that, we ran a linear regression in order to find out the estimated price for the end of 2015 and 2016. In addition, we considered analyst reports from Deutsche Bank, Goldman Sachs, Credit Suisse, and Barclays. This leads to an equally weighted price estimation, the average of the analyst prediction and the linear regression. The range of the estimated prices at the end of 2015 is $57 per barrel to $69 per barrel. Similarly, at the end of 2016, it is $51 to $70 per barrel.
The first area of impact of oil price changes is the revenue from residential leasing. In this business area, SolarCity installs solar panels with no upfront costs and leases them to customers, who then pay for the energy consumed. According to the first half of 2014 filings, this business area made up 70% of the revenue. Regarding the impact of oil, it is important to understand that the majority of natural gas is produced as a byproduct in oil rigs. Also, about 1/3 of the electricity produced in the US comes from natural gas. Because of the low oil price, many oil rigs stopped operating. This leads not only to reduced oil production, but also reduced natural gas production. Therefore, gas prices tend to increase, which affects the price of electricity. The price of solar electricity, however, is likely to stay constant and therefore becomes more attractive to customers. To analyze this impact, we ran a regression analysis on the quarterly earnings of SolarCity from the fourth quarter 2011 to the third quarter of 2014, therefore including 12 data points. The graph shows the regression line in blue, including a 95% confidence interval shaded in gray. The regression line yields a predicted revenue of the 3 months ended on the 31st December 2015 of nearly $60,000. For the 3 months ended on the 31st of December 2016, it will be around $70,000. We think the oil price forecast has a positive effect on SolarCity's revenue from residential leasing. Therefore, we adjusted the projected revenue figures by 10%, represented by the red line in the graph. Apart from the continuously low oil prices, we also take the predicted US residential electricity prices into account. As they rise, we think that SolarCity's residential leasing business area will experience increased revenue. That's why we chose to adjust it by 10%. Exact figures amount to around $65,000 at the end of 2015 and around $80,000 at the end of 2016.
Let's now look at the second variable which will be impacted by oil prices, which is the demand for electric vehicles charging stations in the US. Decreased oil prices are likely to lead to less demand for electric cars and hybrid electric cars, since there will be less incentives to use such cars. As a result, we expect less demand for charging stations, such as the one built by SolarCity for Tesla Motors. Due to limited data on electric car charging stations, we use data from US electric and hybrid electric car sales from 1999 to 2012. The number of electric vehicles on the road directly influences the demand for charging stations. We run a regression analysis to predict the US hybrid car sales. By the end of 2015, it will be around 490,000, and by the end of 2016, it will reach around 520,000 charging stations sold. We plugged in the predicted value from the regression analysis, represented by the red line. The data suggests that the low oil prices will have a negative effect on the demand for electric vehicles, and therefore on the need for operating charging stations on the road. Looking at the data and analyst reports, 10% is a reasonable percentage to discard from our projection due to a decreased demand. Linking the hybrid car sales to the charging stations, we found out that there are currently 9,103 charging stations in the US as of 2014. We correlated sales of hybrid cars directly to the installations of charging stations. Using the result from the previous slides about electric vehicle sales, we can predict that at the end of 2015, there will be around 9,321 charging stations and 9,940 by the end of 2016 in the US territory. As SolarCity accounts for around 2% of the total number of charging stations present on the US territory, this increase will have a significant impact on the company.
Now we will have a look at the situation for charger stations. I would like to talk about the demand for charger stations. According to Tesla's interactive map of supercharger stations, there are presently 172 stations operating in the US as of January 2015. Moreover, Tesla plans continuous expansions.
To finish up our presentation, we want to conclude our findings. We saw that Brent crude oil will impact SolarCity's revenue from leasing and also the demand for charging stations. In specifics, predicted revenue from leasing will account to $65,000 at the end of 2015 and around $80,000 at the end of 2016. The predicted number of US charging stations based on electric and hybrid electric car sales figures are at approximately 9,320 at the end of 2015, which you can compare to the car sales a plus of 2.4% compared to 2012, and 9,940 US car charging stations at the end of 2016, which you can compare with a plus of 9.2% of car sales compared to 2012.